Hi guys, welcome to another video by Optionables. My name is Saket and in this video we are going to review the positional trades which we are holding. So this will be a quick video where we are going to see what exactly we did with the trades which we are holding. And as you all know that we had 3 trades open. So one in Nifty, 2 in Bank Nifty. So we will be quickly going through each one of them, and first is the Nifty calendar spread. So the thing here is I closed this Nifty calendar spread day before yesterday itself because we had realized most of the profits which we could, and there was no point in holding this anymore because the max I could get after that was somewhere around 30 to 40,000 if it actually ended up trading above 17,100. Looking at now, it does look like markets might actually trade above 17,100. So that's the reason I cut this position day before yesterday itself, and we were completely out of this particular trade. So in this we booked a very good profit because the market more or less traded where exactly we wanted it to, and we were out of this position. That means now we are left with 2 more positions which I ended up clearing today. So we'll be discussing about both the Bank Nifty ratio spread as well as the Bank Nifty calendar spread. Previously also we had discussed that we are bullish on the market and we had taken positions which were favoring if the market actually went up. But unfortunately for us, the market actually came down today. So we were ready to hold the positions until 36,200 was broken, and we had mentioned this previously also. So till 36,200 holds, we'll be carrying the position, and once that breaks, we'll be considering to square off everything. But today the market actually broke 36,200 and I could have waited for some more time. So I made a mistake by hurrying to cut off the position. I could have waited for some more time, but I didn't wait. So that's absolutely fine because the plan was anyway to book profits when we actually reach around 36,200. So we will now look at the position. So we had one Bank Nifty ratio spread which looked something like this, and again our plan was once it falls below 36,200 we are actually going to give it. Right, so today it did come below 36,200 and we squared off this position completely, and similarly this position as well. You can clearly see how upward bias we were, and anything below this would have actually hurt us quite a lot. So that's absolutely fine. There is nothing to worry about it. We still booked profits, but today we had a MTM loss. So we booked all the positions, and I'll show you the current position right now. Right, so you can see the current position right now is a loss of 2,17,000, but you can still see overall P&L of 4 lakh, right? So that means we have totally gained 4 lakh from these 2 trades put together, but today alone we have lost around 2,17,000, right? And if you see this particular position, net position book, I have chosen day wise only. So today if I hadn't booked anything, towards the end I would have recovered almost 4,40,000, which means instead of having a loss of 2,17,000 I would have had a profit of 2,40,000 on the positive side. So that is the opportunity cost what I lost for booking the trades early. So that can be seen in the day wise net position. So this is the total opportunity cost which we paid for booking the trades early today, right? So apart from that, you can see that the overall trade did end in positive, and finally towards the end, based on how the open interest were, we took some more additional positions, and that was we shorted 37,200 calls very aggressively because we saw a lot of call writing happening at 36,500 as well as 37,000. So we didn't expect the market to go towards 37,200. So we actually shorted this very aggressively. So as you can see here, we have around 8,000 quantity short in this particular strike, and if it actually goes down to 0, if we don't see any big move tomorrow or day after, we can actually expect to recover this entire loss of 2,17,000. So previous few days the market had actually consolidated and given us a very good profit, and we'll be checking that out right now. So here I'll be just going to reports from web links, and here I'll go to reports in reports. So as you can see that today we have already got our ledger entry, which means the P&L record will also have that. So I'll just put from August itself. So you can see that overall we are at a profit of around 17 lakh including today. But if you see from August last week when we started carrying these positional trades, we have done fairly well. So we are at a positive of almost close to 4.5 lakh, right? So now we'll be quickly looking at the option chain as well as open interest and try to see what the data is suggesting. So right over here, we'll be quickly moving into open interest. And in Nifty, what we saw today is huge addition of calls. So we saw close to 45 lakh new call contracts being written as well as 12 lakh put contracts being unwound. So what that means that market participants are expecting limited upside in the market. So now if we actually look at this particular historical option chain, so here what we get to see is there is a huge amount of call writing at 17,500 as well as 17,400, and overall calls to put ratio is almost equal. So and on the downside we have huge amount of put writing at 17,300 and 17,200. So we can expect this expiry to be in a very short range, and that too between 300 to 400 is what we can expect the markets to expire at. So that is what the data is suggesting right now for Nifty. And when we look at for Bank Nifty, what we see is today there has been a lot of put unwinding at higher levels and lot of call additions at lower levels. So when we also look at the historical option chain, so we can see that there are more number of calls compared to more number of puts, which is a clear sign that the upside is limited for Bank Nifty. So with that hope itself, we have shorted so much quantity of 37,200 call options, that to this expiry. So we have 2 more days to expiry, and there is a huge amount of build up of open interest at 36,500, and most likely, so if you look at the premiums of 36,500, both of them are trading in the range of 200 rupees. So which means most likely the expiry is going to happen between 36,000 to 37,000, and short straddle is going to give us a very nice profit. So this is the most likely expected range where the expiry will happen, because there's a huge short straddle being built up here, and we have some strong put option writing at 36,000 and call option writing at 37,000. So based on this, we can expect expiry in this particular range. So that is from here to here, right? So that is for the video as of now, and tomorrow I might actually end up taking some more additional positions. So let's see towards the end. So I will let this decay as much as it can till the end, and towards the end I might actually end up taking some additional positions. So with that, we also come to the end of this video, and if you are liking the content on this channel, then please do hit the like button, share as well as subscribe. Thank you so much for joining, guys, and I'll keep you updated regarding the trades. See you soon.